Hello, this is Coach Mike from WinningStockCoach.com. I'm going to go over my market overview for the week ahead, the week beginning December 1st, 2014. New week, new month. Last week, it was a holiday week, so didn't expect a lot of movement. I said that in last week's video that really didn't have that high of expectations. We did hit a new all-time high middle of the week. Closed, though, pretty flat on the week from where we opened Monday. When you look at the weekly chart for the SPX, the first chart I have here, it does show still no reason to believe that it's indicating a pullback from this point, but I still wouldn't be surprised to see a little bit of one. I'm going to switch over to the daily chart. You can see after a decent day, Monday, we pretty much finished Friday right where we started Monday, but it was a slight gap up from the prior week. So quite literally, from this point, I think we've got to look at, until we get some sort of better confirmation on direction, more of a shorter term trade made on the initial direction that you might see from the markets tomorrow early. My normal Monday trading plan, though, is I am one that stays kind of with reservation Monday morning, and I kind of monitor some stuff through the lunch hour, and if I'm going to make any type of bigger trades, I make them Monday afternoon. I might piddle in a few things early for day trades, but overall with the SPX, it didn't leave us a lot to go off of. Slight gap up on Monday, and we pretty much finished Friday where we started, so it's going to be very, very interesting to see where we go moving forward. Personally, when I look at the SPX chart, obviously I got this 2102. I said it the past couple of weeks, I was skeptical that it could get up there to it, but you kind of got to look at it and say, well, it might. So, going to have to really use last week as a consolidation range. You can box that in with horizontal trend lines or horizontal lines there on your charts, and really play that as direction with either line, whether you go below and short or back above and go long. Use those lines as your support/stop area for those trades up here at this area. Moving over now to the DJIA chart, the Dow Jones Industrial Average. We talked last week about getting into one of my two target areas. Actually, our high almost hit that higher side target there in the middle of the week. But much like the S&P 500, a little bit of a move up the first couple days, move down to where we started for the close of the week. So not really a lot to go off of. Now with the DJI, unlike the SPX, because it's gotten up here into that target area I was watching for, if I started to see a bullish or a bearish chart pattern indicating a pullback, I would begin to plan for that short trade. I think at first that I'd be looking back to the prior weekly swing high point, 17,279.74 area as a support, and if we get below that, then this 16,397.90 would be the area that I would be watching. Moving the Dow Jones chart over to the daily, you kind of see what I was talking about with the weekly candle. 4 days of tradable time last week because of the Thanksgiving holiday, and really 4 almost just doji candles. Didn't really get anywhere. So much like I said with the SPX, you set a horizontal consolidation channel on your highs and lows for last week. If we break below it, we use that low point as our resistance, but it would be our stop point if it rose back above it. And if we make the break above, we use that line as our stop as a support point for long trades. Personally, you won't see me doing any long things for the DJI because it's up into my target area. It would either be it indicates the short trade opportunity for me, or I wait until it indicates the short trade opportunity. So now that we're up into that target area, that's my game plan for the DJI stocks. Over now to the RUT, the Russell 2000. This is the small cap index. Looking at this, it's going to be 4 weeks of me telling you the exact same thing, that now that it hit my target, we need to wait for it to stop going sideways. I had this target area 1171.49. It got a little higher than that, but it's a target area, and as you can see, as it's come up here, it's closed right across that pretty much each of the past 5 weeks now. I'm not one that wants to be foolish enough to try to convince myself it will go up or it will go down. I think it's likely that it goes down from this point because it has come into my target area. And once it confirms a pullback with something better than a doji candle on the weekly chart, then I will be looking for short trades in the small caps for probably, to watch this area of about 1048.39 here as I got on my chart, as a potential pullback point for the Russell 2000. And, using the index is really a gauge. One small cap stock I'm really, really interested in a potential short trade on is Zillow. A lot of people foolishly think that because it's $100 plus stock that it's not a small cap. It is a small cap, and I love that chart for a potential short. So that's one that's kind of on my priority list watching into this week, but won't make the entry regardless of what the Zillow chart does until the index chart confirms it. Now over to the NDX. This is the NASDAQ 100. We talked last week about still thinking it had some up move to go to our target area. And I'm going to switch over to the COMP really quick, which is the NASDAQ composite, the overall NASDAQ. And you actually see we got up into that target area I was looking for. So what I'm going to be looking for right now, if we do get more of an up move in the NASDAQ 100, the NDX, to get up to that target area I had, I'll start to expect a little bit of flattening out on the NASDAQ, the COMP as a whole, and start to be watching for those pullback points. This is one that, when I go back to the NASDAQ, freely admitting that there's a good possibility it could still continue up a little bit. So I'm not going to rush into trades. If I get an opportunity for maybe a day trade on one of the tech stocks, the hot tech stocks and options, maybe take that opportunity, but it won't be anything with higher long-term hopes. And again, just going to kind of wait on this to settle out and tell me that it's ready to come down some before I make a move on the NASDAQ. One thing I'm going to add to the video this week that I don't normally talk about is the TLT. This is the 20-year Treasury ETF. It's kind of a replication of bonds, and usually we see it trending opposite to the major equity index or indices. The TLT has actually been on a nice uptrend here lately, and it really started right around the first of the year when the U.S. markets, even though we've gone to higher highs, started trading much different than they were in 2013. It wasn't too long ago, the middle of October, where we had dropped much lower than expected, and it started to look kind of bad. And through November, rallied really nice for the entire month and, got up to new all-time highs. Well, during that time, the TLT has started an uptrend. So what I'm looking for on the TLT is actually these prior highs here, these resistance points. And I do not think that so long as the equity indices are trending upwards, that we will break both of these here, these first 2 points I'm showing as resistance. This higher one would be 126.37 and down here 123.39. I don't think we'll break those for the weekly close. I don't care if it goes there sometime during the week, but I don't think we'll break it for the weekly close. And listen to me here, if the markets continue upwards. If the markets kind of start to pull back, the equity markets, I'm going to expect that we could see those resistance breaks on the TLT. And you can see from the hard fall in 2013 that the TLT took, it's pretty much come up and nearly just made up the move from that fall. And if it were to break that mark, I think we would start to see a little bit of a different trend in the equity indices. So I think, even though I don't normally talk about the TLT chart with the market overview, I think it's something that's at a point right now that's important for us to watch, because if you understand the inverse relations between the bond markets and the equity markets, then you start to understand a lot more of what I've mentioned here about the similarity and how right now we've got a comparative trend, or do we, since equity indices are not in the same uptrend they were before. That uptrend, while still up, has gone to a lesser angle of up, and we began an uptrend in the TLT. So going to be really, really interesting as we approach the resistance point to see if we hit the resistance point and begin a hard fall on the TLT, or if we break it and begin to see a change in trend on the U.S. equity indices. This is Coach Mike from WinningStockCoach.com, encouraging you to always have a plan for your trades and to simply react on what the market gives you. Don't convince yourself one way or the other. Just be prepared and react. Good luck in the upcoming trading week, and God bless.